Is Origin Materials a company that can help reverse climate change? Origin Materials is the world's leading carbon negative materials company, meaning that their technology can remove CO2 emissions from the atmosphere, which should help to reduce global warming. Origin Materials is in the process of going public on the NASDAQ via a SPAC business combination with Arteus Acquisition Inc., ticker AACQ. The business combination is expected to be completed in the second quarter of this year, and the new ticker is expected to change to ORGN. Full disclosure, I do have a position in AACQ. In this video, I'm first going to give a high-level overview of Origin Materials. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Fourth, I'm going to go over my game plan for investing in the common stock and the warrants. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. What is Origin Materials? One of Origin's primary goals is to fundamentally change the way plastics and other consumer and industrial products are made in order to reduce carbon dioxide emissions. An estimated 45% of the world's carbon emissions comes from the production of these materials. Today, more than 10 million barrels of oil per day are used to create these materials, which releases massive amounts of carbon dioxide into the atmosphere, contributing to global warming. Origin's vision is to replace this oil use with non-food feedstocks and materials, while capturing carbon in the process. The kinds of abundant, low-cost biofeedstocks they use in their process include things like wood chips, cotton trash, bagasse, pulp waste, cardboard, rice hulls, and whole cane. And as you can see from this slide, countless products can be manufactured using Origin's carbon negative materials. And their core technology uses CMF, which is short for 5-chloromethylfurfural. There is a total addressable market of over $1 trillion, and they have a near-term focus on polyesters, which has a $390 billion total addressable market. Timber feedstocks are price competitive with oil and 10 times cheaper than bio alternatives. Even before the de-SPAC, Origin is 11% owned by customers who are also investors, which includes PepsiCo, Danone, and Nestle. Their technology is protected and validated with 19 patent families. And their core technology is protected in key countries, validated by customers and third-party experts. And they have generated approximately $1.4 billion in customer demand from a diverse mix of industries. With $779 million in off-take agreements, $243 million in capacity reservations, and $359 million in negotiations. Origin Materials, like many other SPACs I've talked about on my channel, is still pre-revenue and has yet to commercialize their technology. They expect to have their first production plant, called Origin 1, operating by the end of 2022, with Origin 2 launched in 2025, Origin 3 in 2027, and Origin 4 and 5 in 2028 and 2029. Initially, they are only focusing on creating recyclable PET plastics that are not biodegradable. But their long-term goal in 2027 and beyond is to produce degradable PEF plastics. However, further study is needed to determine if PEF degradation times meet ISO standards. Now let's take a look at their revenue projections. As you can see, they do not expect revenues until at least 2023, which is after they expect to have Origin 1 fully operational. In 2023, they project $60 million in sales, and they are projecting $830 million in 2026, representing a 3-year CAGR of 140%. They are projecting to be EBITDA positive in 2025. That was their base case projection. But in this slide, they're projecting even higher revenues of $1.655 billion in 2026. If they can secure higher prices from new customers, and if they can add capacity at a faster rate than their base business plan, by adding 2 trains per new plant, doubling the capacity of each. So now let's take a look at the transaction overview. At $10 per share, the implied pro forma market cap is $1.843 billion, with 184.3 million shares outstanding. They will have $20 million in debt and $863 million in cash to the balance sheet. SPAC founder shares will own 7.4%. The public SPAC shares will own 39.3%. PIPE will own 10.9%. And existing Origin Materials shareholders will own 42.4%. All right, so that was my high-level overview of Origin Materials and the business combination. I didn't cover all of the investor presentation, so I encourage you to take a look at it if you're interested. And I'll leave a link to the investor presentation in the video description. So what is my bull case for the stock? As this is a pre-revenue company, I believe this to be a very high-risk investment. But assuming that Origin is able to launch its first 2 plants in the next 5 years, I'm going to use the 2026 revenue projected in the investor presentation for their base case. That projected revenue is $830 million. To give myself a margin of safety, I usually take off at least 20% from this projection. But because I am very unfamiliar with this industry and the potential competition, I'm going to take off 40% to give revenues of $498 million. I'm going to use Danimer Scientific as a comparable. And full disclosure, I also have a position in Danimer Scientific. Based on Danimer's investor presentation, they are projecting $117 million in revenues in 2021. Danimer's current market cap is $3.4 billion for a PS ratio of 29x. To give myself a margin of safety, rather than applying a PS ratio of 29x to Origin, I'm going to scale it back to a PS ratio of 20x. 20 times $498 million equals a market cap of $9.96 billion in 5 years. Divided by 184.3 million shares outstanding, and not taking into account any share dilution, gives a stock price of $54.04. Friday's closing stock price was $10.26 for a return of 427% in my bull case. So what is my bear case? All right, so even though they are a pre-revenue company, I don't believe that there is as high a risk for them to go bankrupt in 5 years as some other pre-revenue SPACs that I've talked about. Primarily because of the off-take agreements of $779 million. Now, I don't have any details about these agreements, but it's my general understanding that off-take agreements are legally binding. In my bear case, I'm going to say that they are not able to scale well and that their technology doesn't fully deliver a carbon negative solution. And in that case, I'm going to reduce their revenues to 25% and lower their PS ratio to 10 instead of 20. This results in a market cap of $2.075 billion and a stock price of $11.26, which would be a very poor 5-year return on investment. So what is my game plan? As I said earlier, I do already have a long position in Arteus acquisition. I actually bought some call options that expire in August, and they are currently in the red. I also added AACQ to one of my M1 Finance portfolios. So right now I have a very tiny position in this SPAC. Because I think that this is a very high risk play, this is less than 1% of all of my stock portfolios. Even though I think it's high risk, I do very strongly believe in what Origin Materials is doing. So at this time, I just plan to keep my position small, keep dollar cost averaging into AACQ common stock, and continue investing after the de-SPAC is completed. I don't plan on investing in the warrants at this time because I already have a lot of money invested in other SPAC warrants, and I want to make sure that I don't add too much risk to my portfolios. And if you want to know more about SPAC warrants, be sure to check out my SPAC Warrant Basics for Beginners video, where I answer a lot of questions that viewers have asked me about warrants. All right, so if you want to know exactly what I'm trading in my Fidelity All SPAC portfolio, be sure to check out my Patreon. For $5 a month, you get all of my buy and sell alerts from that portfolio. There's also access to my private Patreon Discord. The Patreon Discord channels are inside of the free public Discord server, but they are completely separate and private from the rest of the public Discord. If you want more than just my buy and sell alerts, then I also have a higher tier where I share all of my holdings from that portfolio and 2 of my other long-term portfolios every month. And if you want to become a super alpha OG and get a shout out on one of my videos every month, I also have a tier for that. So be sure to check out my Patreon if you're interested. A link is in the video description. And as always, a big thank you to the amazing patrons that have already joined. And I also have a free public Discord. We have over 500 members. It is the most awesome Discord community. Definitely my favorite place to talk SPACs and other stocks with other members of the community. Be sure to check it out if you're interested. A link to the free public Discord is also in the video description. All right, so let me know what you think about Origin Materials and what other SPACs you're watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.